If the war and uncertainty in the markets have left you wondering what to do with your portfolio, here's a segment that might just lift your spirits. Hong Kong-based whiskey investment firm Rare Whisky has just launched its second private equity whiskey investment fund, aiming to raise up to $50 million from professional investors who are seeking long-term capital appreciation. The new fund builds on the success of its first fund, launched in 2014 as the world's first private equity whiskey fund, which fully exited in 2021 and delivered a 13% annualized return over 7 years. The move also comes despite collectible whiskey prices falling nearly 40% over the past 2 years as the industry faces a broader reset after years of strong growth and oversupply. Rickesh Kishnani is co-founder and chairman at Rare Whisky Holdings and joins me around the set here. Rickesh, it's really great to see you. And a good segment. We like alternative investment and a chance to talk about your new fund here. So this is your second fund, looking to raise about $50 million with a planned exit in 5 years. Can you discuss first the active cask and bottle strategy?
So basically, the basics of the economics of whiskey just come down to simple supply and demand, right? So to make an 18-year-old whiskey takes 18 years because it has to be aged in the cask that entire time. Now, based on that, if you look back over the last 50 years, the Scotch whiskey industry has seen periods of oversupply and undersupply because it's impossible to predict demand 12 years, 18 years, 25 years into the future. And usually what we see in those situations, obviously, is some new demand coming up from a new country. So based on that, and as you pointed out, we have seen prices of bottles in the auction market decrease over the last few years. We believe the timing is right to be able to go in and make some purchases of distressed assets at the lower end of the market. And I think most of my colleagues in the Scotch whiskey industry would agree that we expect to hit that in the next 12 to 18 months and then be able to take advantage of some tailwinds with some trade deals and other positive signs that we're seeing out of countries like India.
In terms of the timing, the entry point right now, in the last 2 years, as we've discussed, prices have come down about 40%. What is your outlook for the next couple of years, and who are your investors? Where do they come from?
I think, to explain a little bit what's happened in the last couple of years, obviously the whiskey market was doing really well through the 2010s, mostly based on new demand coming out of China. We saw that happen back in the 1990s when the U.S. was a market that came onto the scene buying whiskey. And what we've seen now in the last 2 years is really a COVID hangover, if you will. So during COVID, obviously bars, restaurants, travel, retail stores, everything was closed. So a lot of stock piled up in all of these locations around the world. Generally speaking, it takes 2 to 3 years for this supply chain to then catch up with the right amount of demand, which we expect to happen in the next year or so. In terms of our investors, similar to our portfolio and LPs from Fund 1, we'll be seeing a lot of investors, we hope, from Hong Kong, Singapore, Taiwan, maybe a little bit from India and Dubai as well.
In terms of risks, we've talked about falling whiskey prices. Apart from prices, what else should investors be notable of? Because we watch out for choke points. I was talking to an earlier guest, and he was naming different choke points that we have, the Strait of Hormuz being one, of course, the trade war, various different ones. What are some of the risks in this type of investment?
Well, I'm glad to report there's no whiskey stuck in the Strait of Hormuz, so that's one good piece of news. But in terms of risks, I think there are really two, right? One is liquidity, and the other is structure. In terms of liquidity, a big difference between Fund 1, which was more of a buy and hold 7-year strategy. This time we're employing a much more active trading desk strategy. In fact, using proprietary AI technology and tools we've built that allow us to have a better sense of prices across the market globally. So having an active trading strategy means that we won't be sitting on a lot of assets for any long period of time, which decreases our risk. The second one, obviously, decreases our risk for liquidity. In terms of structure, this time we've partnered with AOP Capital, which is a management firm based here in Hong Kong. They're the fund manager. Everything will be licensed under them. There have been some frauds and some scams in the whiskey market, unfortunately, over the last few years. The structured way we've presented everything, including obviously all the audit requirements and everything going around a private equity fund, we hope will give investors that credibility and that trust.
In terms of the market for whiskey, some could call it liquid gold. This refers to highly valuable, precious, or rare liquids. The global whiskey revenue is projected to grow from $62.3 billion this year at 3 to 4% CAGR. Is that in line with your projections? Can you discuss your growth outlook?
Yeah, I mean, if you look at the global whiskey market, we're actually seeing, according to SkyQuest, the global whiskey market valuation at a little over $100 billion, with the expectation that that's going to reach $175 billion over the next 10 years. So that's showing a growth rate of about 6.3%. Where is that growth coming from, I think, is the interesting question. Based on the UK trade deal that was signed last year, this reduces imports in India from 150% down to 75%, with the goal of getting it down to 40% within the next 5 to 10 years. We see that as a massive opportunity. The Indian market, with obviously a large population, but a really growing upper middle class, already has a taste for whiskey. Mostly that's been blends, but now we're seeing a shift towards single malt whiskey and growing demand. China also has decreased their import duty from 10% to 5%. The UK is currently signing deals with Southeast Asia. So the one good news out of Brexit from one regard is that the UK has finally become active in signing their own trade deals, and Scotch and whiskey has always been a big asset that they have to leverage as part of those trade deals.
I'm seeing that whiskey remains an opaque asset. You touched on artificial intelligence earlier. How can this technology help provide clarity for investors?
I think it's really about getting that transparency of pricing data. The opaqueness comes from, obviously, there are millions and millions of casks of whiskey just across Scotland in many different warehouses, and there's no real view of what exactly is in there. There's also no real view of, obviously, what whiskey people collect in their homes. Our hope is to use AI technology, and we've developed our own product using the technology to get a better sense of where prices are, where stock is, how things are moving, and just be able to understand the changes in the market. So from a consumer side, how are trends shifting? Because as we know, certain markets, certain cultures have different taste profiles and therefore have different attractions to different brands. Having the fund and having a diverse product base in terms of the brands that we represent across the whiskey portfolio allows us to de-risk some of that.
In terms of buying a whiskey, where does emotional buying come in, where customers buy casks to mark milestones, weddings, birthdays?
Yeah, so we've just actually launched a new business called Casks of Significance, which is focused on exactly this. I think the beauty of whiskey is it's the only product in the world that I know of that goes up in age and goes up in value and goes up in scarcity and goes up in quality as you get older. So having a cask of whiskey, for example, my daughter is 6 and she doesn't own anything in this world, but she does own 2 casks of whiskey, which of course she's not drinking yet, but when she gets 18, 25, 30, she's gonna have a cask that's as old as her, which she could celebrate for her birthday, for graduation, for who knows, a wedding one day. And based off of that experience, I've now started this business to bring that emotional opportunity to collectors around the world to have the same experience I have.
So in terms of the whiskey, which year should people be investing in? Which year should they be drinking? Is that the same?
The good news is, unlike wine, there are no bad vintages in whiskey. So it's really about what year is important to you, whether that's the year your child was born, the year you got married, the year you IPO'd your company or started your company or exited. Everyone has different years of significance. And the beauty with whiskey is we're able to find the right cask from the right year and be able to match that with the customer around the world. And then also through owning the entire cask to glass supply chain, which we have in Scotland, through our partners and investments that we've made, we're able to then allow those customers to bottle the cask at any time that they want along the way. Instead of just having to wait to bottle all at one time, people can enjoy the cask at different years along the journey.
Rickesh, thank you very much for joining us today and helping to educate us on this. I'm glad it's Friday. We can have a happy hour, and this is one idea.
Thank you so much.
Rickesh Kishnani, thank you very much from Rare Whisky Holdings.
Hey guys, Rickesh here, the Whiskey Chief. Firstly, thank you so much for watching this. I really appreciate it. If you could like and subscribe below, it really helps us bring the best whiskeys to you and keep doing this show the best we can. Thanks.